Hello again. I thought I'll do a quick short video about the execution of that setup when it happened at 4 a.m. We can go over several entries, but this is the ideal setup with a great risk to reward ratio when it comes to trading. This is the execution is what counts. It's not as much analysis as much how you execute that setup. So we were talking about that pullback towards 50%. How are we gonna know if that's a good area to enter or not? The overall structure is showing a great probability for the area, for this area to hold here, but how do we execute it with a minimal risk to reward? And let's dig down to the 5-minute chart, and this is the same area we were looking at. So when the market started approaching this level here, we hit the 50%, we pulled back to the 90 MA. The trend is still up, and then this is the ideal and the best trades is when stops are taken out and the market reverses. This is where the liquidity is. Everybody shorted here in anticipation of the 50%. Obviously you have to think outside the box. You have to look at the other side of where the traders are stuck or where the traders are trapped. Where did they place their stops? And that's where you look for the market to reverse. So that's where the liquidity is. So if everybody who's done the analysis will be looking at the 50% to short that market. So if you are an intraday trader and looking at this area, you might put a stop much higher here, but the risk is much higher for the time being for the potential reward. But you want to find your entry to the minimal risk you can take. So sometimes you miss trades, obviously. Sometimes you get the best trades. To size up a trade, you have to get a very good conviction and very good conviction and entry point for you to have a solid risk to reward. So here was a good entry area after a retest of this level with a divergence on the CCI here. So obviously overnight the volume is not as much as during the day, but this is which happens to be it's a plus sometimes because the market moves in a very nice rhythm overnight compared to the daily moves during the market hours. So we had a beautiful divergence here. If you want to look at it, there's a divergence here, and here we made a high with a lower momentum, and an ideal entry would be taking out those bars low. So if you entered at 724, 723, below the round number 70.25, that's where usually crude oil stops at the 25, 50, 75, and the round numbers. Keep in mind keep an eye on all those numbers. So a stop would be around above that high. I will give it 10 ticks probably. So that'll be a 15 tick stop for potential. If we continue to go lower, looking at the bigger picture, if this area holds, we're heading down to test the 69 area. So you're risking 15-20 ticks for a potential move of what would that be, 70.25 to 69.25, a minimum of 200 ticks. This is where the power is in finding those higher probability, higher time frame setups and using the intraday execution charts to maximize your potential and minimize your risk. So this is I thought I'll just point this out. I wasn't up at this time, but this is very good educational video for others who do not trade intraday, or people who traders who trade intraday, to find setups like those together with a great location to execute and trigger their entry with a potential high reward, risking 20 ticks, 15, 20 ticks and making 100 to 200 ticks. Obviously, nothing is guaranteed. The market would have reversed up, gotten your stop, and then reversed. But then that's where the execution and skills comes in, where you can re-enter again. Trading is about taking small losses and maximizing your profits. So if you lost 3 times on 10, 20 ticks here, you can easily make it up with a 200 tick move and cover all your losses. Plus using size management, adding into pullbacks like in this area, or just how you execute based on your confidence. It's a very personal, very emotional, very focused kind of execute when it comes to executing trades. Every person is different. How you look at things is totally different from one person to the other. So that's where the self-mastery and trading differs from one person to the other. So I'm just sharing this. Maybe get some, hopefully you'll get some insights on how to look at the markets on a bigger picture and how to execute it on a smaller time frame. You can refer to my previous video about how we analyze the market and potential for the market to move down. As you can tell, the same thing happened on a daily chart here, where the market went up, got the stops above prior day high, which I mentioned in my previous video. Here they got the liquidity and the market reversed, and these are the top best setups you can take advantage of, whether on a daily bar or on a 5-minute bar. Taking the stops and the liquidity above a level, and then sellers comes in and everybody who bought that area flips to covering their positions and selling, and the market goes down. Hope that was a good educational video for execution and how to manage risk and to have great risk to reward ratios. Have a good weekend and hope you enjoyed it.